All righty. Good morning, traders. Sorry. Give me 1 second. I went to adjust my microphone and that didn't work. Hold on 1 second. Okay, sorry about that. I was going to adjust my microphone and it almost popped off of my desk. So maybe one of these days I'll show you guys what the way it's on my desk. It's not the most efficient way. Anyway, hope everybody's having a good session. It's actually quite slow. The dollar just got a little bit of a lift here, and just a little bit of a pop. And I'm not sure why. I had to step away from my desk for a second, so I'm kind of looking around. Did you guys see any reason for the dollar move? We just had a little dollar strength come in, but I'm not sure why. Like I said, I'd step US bank launches Bitcoin custody service. I don't think that was it. Bitcoin didn't move on that. Yeah, maybe because gold's crapping. Did you guys see the gold? Yeah, that's one of the things that's moving right now. Let's get over there really quick and let's take a look at gold. And I'll put this on the bias chart. You guys know we're already bearish, but I think this is one of the reasons why the dollar is getting a little bit of a lift right now, is you see that the gold's pulling back, and we were just higher, and then gold actually slumped to new lows. So I'm thinking that's probably the reason why the dollar is moving right now. So let's go over since we're already dealing with gold right now. 1780 is still resistance. This is another level of resistance. Just in case we pop higher, would probably be around 1800. I'm going to write down both numbers, just because gold's getting a little volatile right now. So 1800. I'm going to say this is bearish still. Support is going to be right here. As you guys know, 1720. And like I said, I think that's the reason why the dollar got a little bit of a lift there for a second. It's been a very slow morning, by the way. You guys are quiet, abnormally quiet. What's up with that? Silver is at 23. That's going to be resistance support again. Well, I think dips back down towards 22 are going to find support, even though that we've been lower than that down here at this 2130. I still think that 22 should offer support near term. What did I write yesterday? Let's see. What did I write? 22. Okay. So that's what I wrote yesterday. So 22, I still think is going to be support. Hugo said, yo, Blake. Laugh out loud. Lorraine said, here and awake. Good. Like I said, you guys are quiet this morning. 22 bucks would be support. I still think silver is bearish. Okay, let's go through the majors. So Euro's still trading heavy. Any move towards, at this point, you can see here's our fib, right? Now, how do you think I would define the current move in the euro? You guys can answer. You don't have to answer, but I just want you to think about it really quick before I write all this down. Like, how would you define that? Shallow retracements, right? I mean, look, the euro's trading heavy, and I mean, what's probably going to happen here, and I'm going to draw it out for you just so you guys can see it. The euro might actually make a new low here. What's going to happen with relative strength? Relative strength is probably going to make a divergent low. So the next time that the euro intraday, and this is a 4-hour chart, right? Next time the euro gets oversold on a 4-hour chart, I think you need to be covering up some euro shorts, in my opinion, if you're short euro or if you're long dollars. Because if we make a new low, like let's say the euro makes a new low, let's say we even get to 115, probably going to sell off and have a divergent RSI like this. And then you have to be a buyer down here. That would be my thought process. Okay. Technically. I'm not saying I'm going to buy the euro. I'm saying if I'm long dollars, I might, pull some of that off potentially. All right. Support today, 115. I think yesterday we wrote down 14, didn't we? Or 115.85. Didn't we do that? 115.85. What's today's lows? 115.89. 115.86. Excuse me. It's right where we're at for the most part. So next support is going to be 115.60. What did we write down yesterday? 115.65 maybe? 15.60, I don't know. Let's 115.60. Okay. That's still good for today. Key resistance is going to be 116.55. Bearish. Sterling. So we were looking for possibly a move to the 618 retracement if we broke 136. We came pretty close. So this previous support should offer resistance at the 50% retracement, which comes in at 136.65. Even though we pop back above this, I still think that the sterling's bearish. Huh. Okay. Support from current levels. Be right there. That little spike high, these little spike lows, which basically come in and let's call it 135.20. I think that's what we'd have to deal with today on any dip. I can't imagine us going much further than that today. I mean, obviously I could be wrong, but yeah, stocks are still trading heavy. All right. Aussie. So, that's holding. So 73.25. This is the 50% retracement right here, right? So right here. So, I mean, yes, that little trend line is capping us, but let's just say it breaks. I mean, we still are going to have resistance up here, 73.25. Oop, this is bearish. And I still think we're kind of range bound here in the Aussie. I'm bearish. You guys know that. If you know I'm bearish the Aussie overall. I still think the Aussie is going down to 70.50, and I'm buying. By the way, just so everybody's aware, I'm buying with both hands down there. I'm going to get long fairly aggressively down here. So if we make it, I'm not sure if we're going to make it. I'm just saying if we make it, I'm a buyer, and it's going to be pretty aggressive. But like I said, the question is, do we even get there? Because what we could be doing right now, and let's remove this, and let's remove this for now. What we may be doing here is something that looks like this. And I'm going to just loosely draw it. Something like that. That looks entirely possible. I don't want it to be like that. I want it to actually just make one more low, but what I want and what we get are two totally different things, as you guys know. So today, support, we'd have to imagine is anywhere down here. $72.20. Oops. What did I write yesterday? I wrote 72 and 71.70. I think I wrote 72 because of that spike low. I just don't think that's going to be a factor today. I'm looking at this right here, right? That's why I think 72.20 is going to be more of a support. Like I said, I'm what I don't want to happen is probably what is going to happen is we're going to see something that consolidates. I just don't want to see that. CAD yen. Put this in the chat room this morning that, you know, probably going to break out here. I wouldn't be surprised to see the CAD yen trade up to this 127% extension. Right. I'm long dollar CAD too. I mean, I'm long, you know, so it doesn't do me any favors that this is going higher. But with crude oil doing what it's doing, it makes sense, I guess. Okay. Back to analysis. I sold the Kiwi yesterday at 69.71, and I have a more. I canceled my order. Yesterday, I was going to try to sell more on a move to 70 cents. I was hoping we'd get right up here. I still think this is going to be big resistance. So 69.90. Support intraday. I mean, I would say 69.20, then 68.60. Just looking at this. $68, what was that? 68.60. Okay, there you go. Dollar CAD. Yeah, if you guys aren't in the chat room, I did buy this yesterday. Brand said, my God, I missed a lot before being informed. I wanted to see what you thought on the pound. What do you mean you missed a lot before being informed? What am I? You informed of what? That today's Tuesday? Oh, sorry, the automatic voice thing. Oh, really? That's weird. Mine usually goes off 5 minutes before the webinar, roughly. So take note that we start every day 15 minutes before the stock market opens. Same time every day. So just, we try to stick to a schedule. So this way you guys always know, hey, I need to be in front of the computer at the same time, right? Okay. Just really quick, my thoughts on the sterling. Not a lot's changed from yesterday. I just think that any rally to 69, 136.50 is going to find sellers. That is the 50% retracement, but we might have expended that move. And I think that dips down here to 135.20 are going to find support today. That's why. Those are the numbers. I think you have to continue to have a bearish bias though. Okay. All right. Okay. So back, you're welcome, Bran. Going back to the Canadian dollar CAD. So I bought some yesterday on this dip right where we're at. I own it like right here at 89, actually, like right where the bid's at right now. I mean, I think today we'd have to get above this area really to get a little squeeze going. So that high there comes in at 126.50. Hold on really quick. Let me check something. $38 retracement is 126.40. Yeah, I'm going to say that if we can get above 126.50, it'd probably squeeze a little bit. So, and then support. We're just going to note that level of support. It is a 78% retracement. You can see we just overshot it, but I think that is going to be significant. So 125.55. Even though I'm long, I'm going to keep the bias in range. I have to admit, the dollar Canadian is holding up really, really well, considering crude oil is above $78. I think if crude continues to hold up at these levels, eventually the dollar Canadian has to come down. I mean, I would think, but given the fact that it's still holding up this well in this environment, I mean, it's impressive. You have to admit. Dollar Swiss, same crap, different day. Support 92.20, resistance. I know I was writing 93.30, but I think we can probably inch that up to 93.50. So 92.20, 93.50. Keep that in range. Is that what I wrote yesterday? I'm not sure. 93.50, 92.15. Okay. Well, basically, that's that. Okay. Where are we at? Dollar yen. One currency I really have. I guess this is important, right? Previous resistance, current support. So that comes in at 110.80. Resistance should be any move back up towards this upper end of this resistance here. So it should be 111.70. Okay. Dollar index. So we held support pretty well. That means this little spike low right there is super duper important now. That comes in at 93. I still think we could actually dip to 93.50, but that's going to come in at 93.70 roughly. And that's 93.50. Dollar Canadians at lows, by the way. It's finally getting the crude memo. Oh, and then stocks are rallying. It's turnaround Tuesday, baby. Stocks rally. Euro Aussie lower. So I guess the dollar index is gonna, I'm gonna write 94.50 and then we just have to leave it at that. So 94.50 and put multiple asterisks there. I still think the dollar is bullish right now. Or you know what? I think I flipped it back over to neutral because of that hold. But man, I don't know. Because of this hold from yesterday, kind of think we have to keep it on bullish. Because the dips are really shallow. I mean, they are. Here, let's get rid of this really quick. Low, high. I think while we're above, actually what? I think while we're above this, 93.50, that's a 38% retracement. Shoot, man. I'm gonna have to keep it bullish. Look at the dollar max. This thing's holding up really well. I think yesterday I drew this out for you guys. Let me check really quick. Okay. Yesterday, I drew this out. And then in the chat, you know what? Here, this is how we can do it. This is the chat room. Let's go to the files list. Let's go to yesterday. What's yesterday? Today's the, okay, yesterday's the 4th. Did I post that chart? I'm pretty sure I did. Daily roundup. Oh, here it is. Yes. Here we go. That's what I posted yesterday in the chat room for the dollar max. Okay. I deleted it by the end of the day because it messes up my daily charts if I have all that drawn out. But, I have to admit the dollar max is holding up pretty good, like really good. And Craig said you can also say the loony's holding up despite risk off in stocks. Yeah, I guess you can. I mean, I think the loony is holding up now because of crude, but anyway, I just think the dollar max is holding up really well, and we're holding this breakout point. So that means that, let's do that right there. By the way, Craig, since you're here, did you see my email, by the way, yesterday? Just FYI that I sent you one. 2040 support. And I think we have to say it's bullish right now while we continue to hold these gains. Resistance 2072. Then 2080. Okay. Thanks, Craig. I did not see the response till now. So thank you. US dollar, Norwegian krona. So if you didn't okay. If you didn't see, I put in a new pattern in play today. Why? Because horizontal support, a lot of horizontal support, megaphone patterns somewhere down here, right? Megaphone pattern, 127% extension, even if we do get a little plunge lower. And the 200-day moving average right here, once again. So, I got long some US dollar, Norwegian krona. And after selling it last week up here, getting long again down here. So I'm going to write down today 8:54, and below that, just in case, there's the 618 retracement comes in, which would be next, which is at 8:51. I'm going to write down both those numbers just in case, because, crude's so strong that we might make a push down to 8:51, you would think. So resistance today, now that I'm a little bit more focused here, on this pair rather, previous support, current resistance, that all comes in at 860. Let's call it 865. You have to do this 865, then 880, whatever. What did we get to? 882, 84, 83. Okay, 83. Now, I do think it's in a range. I'm bullish. I'm not super aggressive. And you can see via the pattern in play, by the way, you'll notice that it's only a half size. It's only half size. And that's how I'm playing it personally, because I'm not decisively bullish yet, especially with crude oil where it's at. So, okay. Where am I at? Bitcoin S&P. So Bitcoin broke 49,000 yesterday. That was I'm surprised, actually. So here we are. Let's get rid of this. This is not important anymore. I'm just getting rid of some things. Maximum triangle extension would take us. Oh, okay. So let's call it, that's the maximum triangle extension. Do you guys see that? That would take us to the 88% retracement. So 51.4. And I am keeping it in range because I think it's just range bound right now. Support right now is 47,000 intraday. Oops. S&P. So this is 44,000. 44,000. I'm sorry, 4,400. 618 retracement. That's key. And 4275. Okay. It's bearish. Okay. So your bias chart is finished, guys. That's it. I don't know if it changed a lot from yesterday. Stelios, did you grab that?
I did, my lord.
Oh, my lord. Whatever.
Grab it.
Let me see really quick. I just want to see how much it changed from yesterday. So sorry,
I've already uploaded it.
So the dollar index is really what I flipped to bullish because of, and the reason why that is because of the hold yesterday. So the dollar index, we flipped it back to bullish because of the hold. That's pretty much it. Okay, everything else is pretty much the same. But the dollar index, because we dipped yesterday and held this breakout point, we have to keep it in bullish for now, right? Okay. All right, guys. Well, it's very slow today. I mean, I know stocks are bouncing right now, but it's a slow day.
Back in August, apparently.
What's that?
We are back in August.
Or Blake is back from traveling. How about that?
Yeah.
Right.
True.
All right, Stelios. So you're back for a day and then you're out of here again.
I'm leaving tomorrow morning, but I will have my laptop with me to do
Where are you going?
some stuff. Come on, I told you we're going sailing. It's gonna be warm enough near here, not far, but coming back Saturday.
So, the life of Stelios Kontougoulis. I mean, seriously, like car shows in Milan, sailing around the world.
Dude, you know what? Eventually we're all dead. So why not do it?
No, hey, I think it's great. I'm jealous as I open up my window and I look at the rocks outside of my window. I'm so jealous. All right, guys. Hey, I'm going to let you take over. And welcome back, Stelios, even if it's just for a day.
Thank you.
All right, guys. It's all yours.
Cheers. Thanks, Blake. All right. So like Blake said, it's a quiet day. We're kind of trying to reverse some of the losses in equities, marginally higher. But really at the moment, lately, it seems to be the opposite of what used to be the case. So bounces are being sold instead of dips being bought. But as I said on FA.C.E, I don't think we have changed materially yet in equity markets. This is kind of more like a sideways correction as far as I'm concerned. I mean, we're back to levels from July. So
amazing.
If you look at the weekly chart, I mean, this is barely a blip. So I have to say, unfortunately, for people who are getting excited, I don't think we should be getting excited yet. But it's I'm optimistic. What did we have? We had some data. Services PMI out of the US, marginally better. We had quite a few PMIs today, and surprisingly, we were better than expected in almost everywhere. So services PMI and some composite PMI, but really services PMIs were better than expected. We talked about the RBA on FA.C.E, where they left rates unchanged, and they were kind of cautious. So unfortunately, no fuel for the Aussie to do anything. We have the RBNZ in a few hours. They're expected to hike 25. There was talk days ago about a 50, but clearly markets are realizing this is never going to happen, at least not in this environment. So the question is,
if that's going to be the catalyst for the Aussie Kiwi to move again. It has stalled during the past 2.5 days after a nice rally.
Yes.
We're now testing this descending channel strong line resistance. So, you know, we get something hawkish from the RBNZ. And, you know, I think we're breaking out from here. Alternatively, we're getting rejected. So perhaps, you know, a nice trade unrelated to the dollar can be this following the RBNZ today.
Yeah, I would love to see Aussie Kiwi come close to parity. I think that would be a great buying, a great place to start accumulating longs. I would love that. And if you look at the monthly chart, you have weekly or monthly chart. There's a big channel basically, which is has major support around parity. I see you have that zone, that blue zone, basically.
Yeah,
you
I do have it.
Yeah, yeah.
Let me.
This is a kind of trade I love. So I wait for it for months and months, and then just pile into it. And yeah, there you go. So those lows, you have them twice.
99.90. Yeah.
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 Problem is that a lot of people will be looking at that, so I don't think we're gonna touch it. But if we get really close, I'm gonna get in.
Yeah. Although, as you said, there's a good chance we're not gonna get there.
Yeah. Yeah.
Especially, you know, if following today we get something hawkish and we break out of that channel, then most likely we're going to see more upside for the Aussie Kiwi in the weeks ahead.
True. Otherwise, metals are retreating a little bit again today.
Yeah, once again under pressure.
Yeah, I mean, the dollar is slightly stronger, so they're the first to move, always first to move. And
Very true.
Cryptos are doing their thing. Bitcoin 50,000, Ethereum almost 3,500. Nothing new there. It's I am still looking at oil. We talked about oil, and oil will be a problem for the world economy if it hits, or when it hits 100, and it's already becoming a problem. And with these supply chain problems and issues, I mean, all commodities and everything, with oil going higher, the production of pretty much everything is increasing in cost.
Exactly, because it's a factor of it's something used in the production of the vast majority of goods and in the transportation
exactly
of the vast majority of goods.
And obviously, eventually, we're going to get to electricity for ships, for everything. But this is decades away, probably. So,
oh yeah, not something that's going to happen this year for sure.
Exactly. But and you know what happens with oil when it starts to get to very elevated levels. The producers start hedging the future output, so that's going to be some kind of a pressure against further appreciation. But it's the forces that are driving this is not demand based that much. It's all it's a bit more complicated. So it's not like before 2008 when China was building pretty much everything and needed every kind of commodity and energy source available on the planet. So this is very different. But anyway, oil is driving higher, and it's unstoppable. I mean, it's absolutely unstoppable. Natural gas.
I hope people can also see the parallels, Stelios, with the 70s. 70s, of course, once again, the government blamed everybody else for the huge problems with crude oil. If you remember, there were shortages. The price of oil had literally skyrocketed, etc. And guess what? It was all about inflation. And I think this is a very similar situation. A big part of what's happening with crude oil and some other, not the only factor, but a big part of what is happening with crude oil and some of the rest of the commodities and energy and all that has to do with inflation. And guess what? Once the Reagan administration, with Volcker being the head of the Fed, tamed inflation at the very beginning of the 80s, crude oil went back much, much lower once again. Because as long as the government was trying to blame anything else but its policies for the price of crude didn't really retreat. Once they actually did something to tame inflation, the price of crude oil immediately started receding and went back to very, very cheap levels. So, in my opinion, we're seeing a repetition of the same story. The government and governments in general are going to start blaming everybody else, producers, shortages, supply problems, etc., for price appreciations. And the only person they don't point the finger to is the reckless fiscal and monetary policies that are being followed globally. Once they are forced to realize and do something about the real factors, then and only then we're actually going to see a deflation of prices that who knows how far they will have gone by then.
True. Anyway, it's a difficult situation for governments, for central banks, and I wouldn't want to be in their shoes. But because
why?
You know what, people
make
were saying,
of money.
Yeah, true. Trading insider.
Exactly.
No, people were. I read somewhere a very, very good comment. Somebody said, "Look, how is the Fed hiking rates or tapering going to help the problem we have with inflation, which has nothing to do with rates?" So because it's all supply problems, and how is it going to make ships move faster and supply chains move better and etc.? It's not. It's actually going to choke or start choking the economy. So this is a very valid point. But on the other hand, the central banks have a mandate and they have to do what they can to fulfill it. So that's why I say I wouldn't want to be in their shoes, because really they should be hiking or tapering and hiking. But how is that going to help the problem? I don't know. So yeah.
As we've said, a lot of mistakes have been done for a long period of time.
Yes.
And there is an obvious realization that doing what is right is going to have huge consequences. Doing what was right several years ago would have been much less painful. But as
Yes,
always,
you can't go back
political,
in time.
yeah. And even if we went back on time, what politicians always do is that they postpone facing any kind of problem that they can postpone to make it a problem of somebody else in the future. So that is why we're where we currently are. Of course, in combination with the fact that central banks are not independent in any way,
Yeah.
unfortunately. And even if we went back on time, they would do the same again. I have no, um, I have no misconception about it. I think they would just do it all over again,
Yeah.
and let somebody face the music at some point in the future.
Yeah. Yeah,
Anyhow,
I don't have much else to say. We have
I
some
don't have.
data in a little bit. ISM in 2 minutes, so
Yeah,
maybe.
I don't have very much to say. I said a lot of things yesterday. I don't have very much to say extra today for one simple reason. If you remember, I focused yesterday on mainly two charts, and then we can talk about 1,000 different charts. But I focused mainly on two charts and explained their importance. One of them was the S&P chart and the importance of this descending channel. And as long as we hold it, that there is a decent chance that this is simply a tamed corrective move lower, right? And the second one was the DXY chart, where I mentioned that we should all focus on what happens once we come back down and backtest the broken trend line resistance as support. And for the time being, the answer is we're holding. So as long as we're holding above this, I can't blame anybody for wanting to be long the dollar, right? I'm not, and I don't want to be long the dollar, but I can't blame anybody because we might as well hold here and we might as well have more upside left. It's close to a coin toss at the moment. You can have different opinions, but objectively speaking, if you look at it from a technical perspective, it's more or less of a coin toss. So, we have the 94.50 to 95 resistance area, which is a formidable resistance area. On the other hand, we have this area that we back tested at the lows yesterday, and for the time being, it's holding. So in between, you can be either. You can be long, you can be short. So you can be either, right? I would be completely neutral. I'm not, because I still have exposure being short the USD NOK. But the reason I have exposure being this short the USD NOK and I still have it is because, first of all, I'm in the money. Second of all, because if you notice, due to crude oil as well, USD NOK, or should I say the NOK, is one of the best performing currencies against the dollar at the moment, right? So I have no reason to close a position that is in the money just because we are currently undecided on what's happening. I'm holding, and if we actually do break down from here, perfect. I have more to gain. If not, I even have the potential of closing at some point my trade at the money or whatever. Although this is a more of a longer term position for me, so I'm not sure I'm even going to be doing that. I had 61.9 the ISM non-manufacturing PMI Stelios versus 60. So
more
it is
green
a
data.
bit.
Yeah. Yes.
Yeah, so it is a bit. The previous data was 61.7, so expectations was for a slowdown. And we didn't have a slowdown. Actually, we have a little bit of a higher print than the one we had previously. So definitely a positive print.
And the sub numbers, basically new orders slightly better, employment slightly worse, business activity a lot better. So yeah, overall, it's not a bad number. Yeah.
Overall, yeah, a decent number. Do I think though it's going to move the market? Really? No, I don't think it's really going to move the market. So what were we saying? Yeah. So these are the two charts. If you want to focus on just two things, these are the things you should be focused. If the DXY is first going to break below, let's say 93.5 or above 95, and I say and or because probably these two things are going to move in tandem. and or if the S&P is going to break down from this channel or hold this channel and start pushing higher. Obviously, most likely we're going to see an inverse correlation between the two of them. So the fate of one depends on the other, and as I was explaining yesterday, I'm afraid that we are at a time that we should first be looking at stocks, what stocks are doing, and then determining what is most likely to happen in the bond ecosystem and in the FX ecosystem. So far so good. Yes, with the Facebook news yesterday, we were under pressure in the indices, mostly a little bit more than the Nasdaq, but haven't we actually done something significant since last week? No, we produced actually an inside day yesterday, and so far today, pre-market, we have an inside day of an inside day, right? So the market is coiling here. Let's see if it's coiling because it wants to have another leg lower, in which case you should expect the dollar to indeed hold above this 93.50, 93.70 area and move higher. Or if we are about to move higher and we have found a low at the end of last week in equities, in which case I don't expect this 93.50 to 93.70 area in the DXY to hold much longer. And if that's the case, then I'll feel a lot more free to start looking to get more bearish the dollar against more pairs, right? So keep that in mind. I'm not gonna just constrain myself in being involved with USD NOK. I'll have no problem getting exposure with more instruments than one. Now, we already spoke a couple of times in the previous webinar as well about crude oil. You know my position about crude oil. It hasn't changed at all. A very strong day once again today so far. The next upside target is the 81.25 area, the 127% extension of the last pullback, and I see no reason why anybody would want to be short this, and not at the time being. Another monstrous day higher for the time being for natural gas, which is testing the 620 area and this ascending channel thin line resistance once again. Yes, we're still seeing divergences, but as I said, you should be very, very careful in trying to fade this. It's a very strong market and probably not a good idea to do so.
Steve, I saw saw a few hours ago a chart with the price for retail natural gas in the UK and in the Holland.
It has exploded.
It's up 800%.
Yeah, it has exploded higher.
It's just, I mean, if you're using natural gas to heat and you know, for your house, I mean, it's the bills are going to be ridiculous.
Yeah, absolutely. And yeah, I know it's not going to be forever, but people keep underestimating the ability for the market to move even higher. That's what I think. And there are a lot of people that are trying to fade this, and in my opinion, they might find themselves in a world of hurt by trying to do that. Now, as you said earlier, Stelios, precious metals are indeed once again under pressure, but nothing is really changing. I mean, both gold, silver, and platinum remain in corrective channels, and it's not easy to change my mind with what I see for the time being, that these are corrective channels. Within those channels, though, yes, there is absolutely the potential to see deeper retracements, right? So keep that in mind. There is absolutely the potential to see deeper pullbacks, for example, towards 850 in the case of platinum, towards $21 next in the case of silver, towards 16, even 1650 in the case of gold, right? I will only be turning bullish shorter term as well if we see levels above 1800 in the case of gold, above 2360 in the case of silver. I don't see otherwise a reason for somebody to be trying to pick a bottom, right? As Blake used to say in the past, and pretty sure that's not his saying, but still, you try to pick bottoms, you get smelly fingers, and And that's absolutely the case, right? So it's a different story, though, if you want to have long-term exposure, right? Do I believe that if you buy here, it's going to end up being a good overall level to have gained exposure if you're looking for a long-term trade? Yeah, I think it's going to be just fine, and you're going to do just fine. But do I believe that for a short-term trade, this is where you should be buying? No, I don't see any technical indication that that's the case for the time being. Now, cable, is behaving much better than the euro, and that brings us to one more instrument I wanted to talk about, and that is the euro pound, right? Because the euro pound is breaking through this little channel, but I remind you, I'm looking here at the bigger picture that has to do with this rectangle over here, right? Resistance 87 roughly, support 84.70. We break in either direction, and I think that's going to be, quite big of a development. We're now getting rather close to the support area, so keep that in mind. I think it has been a very boring period for the euro pound, but nothing stays super active or super boring forever, right? So this is a quiet market, and trust me, it can become a very active market suddenly, especially when people stop paying attention to it, right? So this is a market I am paying attention to, like on a daily basis. It's not that I constantly have it up on my chart, but I'm having a look at it at least once per day. And I don't think I'm going to hesitate gaining some exposure with some leverage here once we break in either direction. And I say with some leverage because, the euro pound is one of these pairs that don't massively move under normal circumstances. So it's not like one of the pairs that can really start moving, a couple of percentage points on a daily basis, for you to be worried of having a little bit more of an exposure, right? So yeah, let's see what happens here. I'm quite interested to see, and for the time being, as I said, pound seems to be behaving better than the euro. Let's see if we can do it for a little bit longer for us to break through 84.70, and that's going to be a very nice technical development, and I don't think you should ignore it. I never hear anyone talk on Bitcoin of how the USD, or if the USD pulls it around. That is all the dreams of trading. Now, if you're monitoring Bitcoin against the US dollar, obviously the US dollar does somewhat affect it, right? I say somewhat for one and only one reason. Yes, if you're looking at it denominated in dollars, obviously when the dollar is rising, that is a headwind. Obviously when the dollar is falling, that is a tailwind. Although cryptocurrencies are so much more volatile, I mean, I'm not talking about against any specific currency. Let's say you take a cryptocurrency against a basket of currencies, right? To be currency neutral, more or less, let's assume. Cryptocurrencies are so much more volatile than any of the major currencies that the movement of the euro or of the dollar or of the pound, let's say you want to look at, the Bitcoin denominated against the pound, or, the euro, you don't necessarily have to denominate it against the dollar, right? But all of them are moving so slowly in comparison to how much cryptocurrencies are moving that, it plays a rather minor role, right? Because when you have days in cryptocurrencies that they move like several days, that they move like 5%, and on the same day you have the currency you denominated against having moved 0.3%, yeah, who cares? You know what I mean? In one case, if it moves in favor, then the 5% would have been a 5.3%. In the other case, it would have been, let's say, a 4.7%, right? Who cares? I mean, at the end of the day, Bitcoin would still register a very big up day or a very big down day, oppositely, right? If it's one of these days that they're crashing lower. So that's why, oppositely from other assets that are denominated in a specific currency, people don't really pay much attention of what happens with the currency you want to denominate cryptocurrencies, because its overall movement is a fraction of the overall movement of the pair you're looking at, BTC USD, ETH USD, or whatever, right? That's why nobody's really putting the effort to do such an analysis in the case of cryptos. My God, I missed a lot before being informed. I wanted to see what you thought on. Okay, that was a long time ago, so that was addressed for Blake. You've now used this getting dragged around by stocks. Yes, unfortunately, Brand, that is the case. Okay. Is there anything else anybody wants to ask? I'll be more than happy to look at anything else. Okay, then. So, thank you all for being here. Have a wonderful afternoon. And don't forget to join Blake in 2 hours and 20 minutes from now for the daily roundup. Thank you, Stelios.
Thank you, Steve, and everybody. Thank you. Bye-bye.